Evening. Welcome to another stock analysis and review here on L.E.A.R.N Invest. I'm Jermaine, CEO and co-founder of this community. Today we're going to be looking at Berger Jamaica Limited. We're going to do an overview of the company, look at their financials, look at the price history using JMB Moneyline. They're our sponsors for this video. We're going to look at their dividends. The last time Berger paid dividends was actually in 2019. So we're going to look at that, look at their history of paying dividends, and we'll talk about whether or not they'd be in a position to pay any dividends maybe within the next 12 months. And then finally, we'll talk about any news that we were able to find about the company. And then at the end of it, I'll share my thoughts around the company, what I think is in the future for them and things of that nature. So this video is all about helping you learn about how to make your own investment decisions. This is done for education, and I really hope you find value in this video. Feel free to let me know any comments or questions you have, whether you're watching live or on the replay. So let's get started.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn Grow Invest.
All right, so I have to say before I go into this discussion any further that anything that I discuss here will be for education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell Berger or any other security. We are coaches here at L.E.A.R.N Invest, and so our aim is to provide you with the information that you need to make wise investment decisions. I'll be going through, as I said, Berger Jamaica Limited. Their ticker is BRG on the JSE main market. This video, as I mentioned before, is sponsored by JMB Moneyline. So I'm going to be using the Moneyline platform to look at the price history. So let's, talk a little bit about the company, just in case you might not have heard about Berger Paints before. If you're in Jamaica or the Caribbean, likely you have. But let's just, talk about some of the details here. So it says Berger Paints manufactures and distributes decorative, industrial, and wood coatings, paint-related materials, and is a distributor of automotive coatings. In 1953, Berger Paints started operating in Jamaica and has since then been providing innovative, cutting-edge paint products and services. Berger Paints Jamaica Limited remains the largest paint manufacturing entity in the English-speaking Caribbean, with 95% of its products manufactured here in Jamaica. They're also a subsidiary of ANSA Coatings International Limited, whose ultimate parent company is ANSA McAL. ANSA McAL is the largest regional conglomerate comprising of 70 companies in over 8 territories in the following sectors: automotive, beverage, construction, distribution, financial services, manufacturing, media, retail, and services, right? So pretty much here, BPJL is able to, benefit from being a part of this group of companies, right? And we have here the general manager for Berger that we're hoping to maybe get an interview with soon, so we can maybe get into some more details about the company, the things that we weren't able to see from our own research. In terms of scope of the company, locations, etc., what you're seeing in terms of the red dots are locations for the company. So where they may have, reach or outlets, etc. This information was found on their website. So if you want to find out more information about this, be sure to check that out. In terms of locations, as stated on their About Us page, it speaks about Berger Paints Jamaica Limited, Berger Paints Barbados Limited, and Berger Paints Trinidad Limited. So Berger Paints Jamaica started in 1953, Barbados 1967, and Trinidad in the 1960s. So those are the ones that were highlighted on their website. This is their management team. I mentioned the GM before. Then we have here the CFO, regional sales manager, and operations manager. This was taken from their annual report, their 2022 annual report on the JSE website. In terms of their top 10 shareholding, we have here Answer Coatings International Limited that we mentioned as being the largest shareholder at 53%. Then we have companies like Sagicor, Ideal Group, Ideal Global. That's those 4 group there seems to be the same companies. Not sure, but it would make sense if they were. Guardian Life and First Jamaica Heart NTA pension scheme has about 0.8%, right? So this total here brings you to, this here represents your top 10 shareholders. And that was as at March 31st, 2023, right? So let's look at the financials. In terms of Berger, I didn't really feel like to go into any more details in terms of overview because I take for granted that, again, it's a well-known company. And so they're in terms of the details of what they offer, you would kind of have that information already. So in terms of when we look at the income statements, in terms of our financial review, we're looking at a couple of things. Now, these are the key areas that we focus on. Now, it depends on what we are seeing. We may, spend more time on one area versus the other, but generally, we're trying to compare quarters and year-to-date numbers. This is when we look at the statements themselves. We're looking to see if revenues are growing or they're shrinking. Of course, within the context of what we've been in terms of the environment for the last 2 or 3 years. We're also going to look at margin. So we have a ratio slide that we look at the key ratios and see how the margin has been progressing. We're also going to be looking at our costs increasing or decreasing, meaning margins are getting smaller. And their EPS, is it negative, is it positive, and has it grown from the previous period or year? So what we have are some graphs here, and then we'll get into their Q1 report at the end of these images, right? So we have here from 2018 to 2022, we've seen revenues grow since then. So what you're seeing here, in 2022, they would have had their largest revenue for FY. 2020, of course, would have been lowest in the last 5 years, recovery in 21, and highest in the last 5 years for 2022. And then we see net income being the gray colored chart. So let me actually do that one. So yeah, you're able to see the image for 2018. So little or no net income for 2020. We're not seeing any for 2022. We'll look into those numbers later. In terms of their EPS, 2020 would have been their lowest in terms of the last 4 years, and we would have seen some recovery for 2021. I wasn't able to find the EPS data for 2022, so I don't have it here, but I believe it should be in the statement, so we should be able to see that. So we're going to move to some snapshots of the balance sheet now. 1 second here. Yeah. So for the balance sheet, we're doing a similar thing here where we're comparing quarters and year over year. We're looking at cash. That's definitely something that we're looking at. We look to see how the debt and liability position is. Is that, again, trending in the right direction, or if they did take on debt, why? We're looking at retained earnings just to understand, it's a company, is that also growing, right? And then receivables and inventory really comes down to the type of company, right? So we have here cash and cash equivalents. We see almost 600 million in cash for 2019, and they have not really gotten back to that level of cash since then. So we look at the balance sheet a little bit more for that information, but this is what the last 5 years have looked like in terms of their cash and cash equivalents. This is their gross margins and operating margin. So that's what we're seeing here. So those, in terms of gross margins, that has been above 40% for the last 5 years, just seem to slightly dip below that for 2022. Operating margins ranging between negative and a little bit under 10%, right? So that's what we're seeing here for these numbers. So let's move on to the next slide. Then we're going to look at the cash flow statement. Again, same principle here. We're looking for things like, is a company burning through its cash? What are the key areas in terms of operating cash flow, cash flow from financing, cash flow from investing? Again, just seeing whatever we can glean from those statements and trying to paint a whole holistic picture for the company. So this is cash flow from operations, cash flow from investing and financing over the last 5 years. So we see where 2020 would have definitely impacted them greatly. So that's why everything would be negative at that point. Recovery, of course, for cash flow from operations for 2021. And 2022 as well was not negative, but of course, compared to the last 3 years, 2022 at least appears as if it's heading in the right direction in terms of cash flow from operations. Would have to, of course, look at the statement in detail to see what would have led to it being what it is, because you can't just look at that number without the details of the statement to let you know exactly what's happening. But at least at a high level, this is what we're seeing. And then, of course, cash flow from financing, we have to look at things, well, considering they have not paid a dividend from 2019, would want to look at that statement to understand more of what would have been happening for the last couple of years. This would be free cash flow for the last 5 years. We're not able to get 2022 data, so this would be from 2018 to 2021. So we're seeing where free cash flow would have been, close to 300 million for 2019, negative 400 million for 2020, and a little bit under 100 million for 2021, right? So that's their free cash flow. And this would be the state of their inventory is top left, and inventory turnover is bottom right. Based on the type of company, this is something that we'll be interested in looking at. So inventory turnover ranges between 2 to 3. And inventory in terms of 2022 would have been their largest amount of inventory on the books for the last 5 years. These are some key ratios that we have here on the screen. Now, this was pulled from a platform called Ticker. Of course, I'll talk about that in another video, but what we have here are their return ratios. So you're seeing where, for example, the return on assets for 2022 would have been negative 1%, down from positive 7.3% in 2018. Return on equity, one of the ratios that we typically want to look at, 15.8% in 2018, and down to less than 1% in 2022. So, I mean, you're seeing really the impact maybe for the last 3 years on the company. And of course, when we get to the stock price, you'll probably see that also reflecting in the stock price as well. In terms of margin analysis, remember, we want to understand what's happening here. So gross profit margin, as we said, it dipped a little under 40%. So we're seeing 39.7 here. So it's been above 45% from 2018 to 2021, dipped below 40% for 2022. And the last 12 months are just under 40% as well. All right. We usually want to look at net income margin as well. You're seeing where for 2022, that's pretty much right at 0%. And those are the ones that we typically want to focus on for these short reviews. But if you have the company in your portfolio or are interested in reviewing them, then I definitely want to dig deeper into those ratios. This review, though, is typically meant for a 30-minute review, so we're not going to dig into those right now. In terms of asset turnover, so we did look at inventory turnover. We mentioned that was below 3. Asset turnover is here, pretty much above 1.33 for 2022. Receivables turnover 5 years ago would have been 4.3, now it's 5.59. And in terms of their short-term liquidity, that number stands for current ratio 1.84 and quick ratio 1.05. So those are considered good, I believe, once it's above 1. Of course, you don't want to compare that to industry. And we look at, there are some other details here like average days, average cash conversion cycle, average days sales outstanding. We typically don't look at those, but again, we have the information here for you to look at just in case it's relevant for you. But the next thing I'm looking at would be long-term solvency here, 7% in terms of debt to equity for 2022, and liabilities to assets stands at 50%. So those are their key ratios for the last 5 years. All right, so let's look at their price history now. We use JMB Moneyline, as we said, they are the sponsor for this video. So I'm going to log into the platform to bring up the history. Now you're going to be a little bit surprised with this company, honestly, because this is the first company that we have done a review for that we did not have any trading data at all for the day. So you're not seeing double on the screen. There's absolutely no, there was no trades that took place today, because usually we try to pull the data right before the video. So no trading took place today. We see the queue here on the right. So so we have the buy side and the sell side, and we look at the total orders there. But what we want to do on this side is look at the highlights. So week to date, negative 2.85%, month to date, negative 8%, quarter to date, negative 11%, and year to date, almost 30%. So the stock has lost up to 30% of its value from the start of the year. In terms of the last 52 weeks, it was as high as 1240. And as you see, the price today closing at 751. In terms of volume, 269,000 is the max number of units traded throughout the year. And you see the shares outstanding as 214 million. So roughly about 10% of the shares outstanding would have been what would have traded. And the market cap stands at 1.6 billion. All right. So let's go to the Moneyline platform here. Hope that I shared that correctly. Okay. What is this saying to me? I accept. Hope this is not my personal account. Let me log out to that 1 sec. Let me stop sharing. I hope that wasn't my personal account. Hold on here. One second. I'm just going to wait for that screen to load. Let me know if you've ever considered Berger as a stock for your portfolio. Let me know. I know that, personally, when maybe like 2018, 2019, it was a company that I was looking at. Somebody had said that they liked the company at the time. It wasn't really a company that, I thought about, spoke about, etc. So it's one of those that's typically overlooked. But it's not a company that gets a lot of press in terms of the stock market conversation, right? It's not something that appears a lot in terms of recommendations from brokers, etc. But the company itself is typically well known. So it's interesting to see. All right, for some reason, Moneyline is not loading for me. So I'm going to just skip that for now and see. Let me just try one last time before I move forward. So I don't know if the platform is down or something. Not sure what's happening there. Okay, so I'm gonna move by for now, and if it comes up, then I'll go back to it. Let me do that. Okay. All right. So let's look at their dividend history. Now, the last dividend that was paid, as I mentioned in 2019, that turned out to be a dividend yield of 1.54%. So, typically you want to look at companies whose dividends I think should be at minimum 5 to 10%. I think that's reasonable dividend considering where inflation is. So 1.5% as at their last dividend payout. I mean, they haven't paid one in 3 years. So we'd have to see what their next payment looks like. But typically the amount you saw for 2016 to 2019 would have been above 20 cents for the year. In 2017, they paid a dividend 2 times, or is this a duplicate? I'm not sure. 2016 once, 2015 once, 2013 once. So they do have a history of paying dividends. The amount, though, of course, the amount of the dividend will, of course, determine the yield. And of course, you have your personal yield in terms of the price you paid for it, etc. All those things, of course, are under consideration here, but they haven't paid from 2019, right? So let's actually look at their Q3 report. I think that would be a good time to do that. So I'm going to zoom in. So what we're trying to do here is just understand where the company is in terms of revenues. Typically, we look at the directors or CEO statements. So they've recorded revenues of 718 million, which was on par with what they did same period last year. However, as reported during the financial year, higher cost of raw material and supply chain costs continue to negatively impact cost of goods sold. So that's why I would have seen a decrease in their gross profit margin. Cost of goods sold in Q1 2023 was 407 million, or 3% more than what they had last year. This increase in costs, despite sales volume in Q1 being 6% less than in 2022, and the consumer demand consumer demand seems to have been lower than the prior year. However, volumes in automotive and projects have recorded strong growth of 21 and 12% respectively over the prior year. So consumer demand seems to be going down, but automotive and projects have gone up. Production volumes in Q1 increased by 6% due to focus on improving internal efficiencies. They anticipate further improvements as their new filling equipment is due to be installed and commissioned in Q2. Expenses for manufacturing total 354 million compared to 304. That's an increase of 17%. And these were related to repairs and maintenance and charges related to technical support from their sector and head office, inclusive of costs to upgrading their HR system and implementation of a new CRM, right? So those are costs that they would have had, so that would have impacted their expense lines. And those costs that they're mentioning there are geared towards delivering improved performance in 2023. So they're making those investments with the expectation that it will lead to improved performance. So based on the factors that were mentioned, they recorded a loss of 39 million compared to profits of 23 million for Q1 2022. So they're expecting that over the next few quarters, additional charges may be incurred as this is necessary to improve their operations and performance for the long term. Right, so what they're saying is that they're expecting pretty much more of the same for the next two quarters, right? In terms of outlook for this company, they're confident that the measures being implemented now will deliver on the long-term strategies developed. They continue to manage their risk to the business as the economy continues to show signs of recovery, and they stand ready to support their loyal customers, business partners, and stakeholders, right? So again, we were seeing where there's still an impact or lasting impact from 2020. And of course, as things like, as the different industries are recovering slowly, this will also impact how Berger does, because it's a type of product or service that maybe is not as high on the priority anymore for the different types of customers. And so, I mean, even from a personal perspective now, when I'm, working on my home or repairing my home, painting is the last thing I'm going to think about. So it could be that that type of service or that type of product is something that persons may be pushing back the expenditure. And there are things that may be impacting their margins, as well as they would have discussed in terms of those investments that they're making. So their focus is long-term. Company has been around for a long time. No reason to think that they won't be around for a long time, but just understand that the next 2 quarters are going to be challenging for them in terms of profitability, based on what this is saying. All right. So property, plant, and equipment stands at 288 million. We said we'd look at cash. So cash is at 265 million. That's for the most recent quarter. Inventories stand at 1 billion. Trade and other receivables have actually grown here. Again, this could just be a symptom of maybe the economic conditions. Who knows? I don't recall seeing any notes on it. We'll check to see. But yeah, that's something that maybe, credit terms extended or anything like that might impact this number here. But, let's see how that goes. In terms of liabilities, deferred tax, post-employment benefits, lease liabilities. This is what I was looking for. I was wondering where the current liabilities were. Due to immediate parent company, so this is here 362 million. Due to fellow subsidiaries, 535 million. Dividends payable. Now, since this is for Q1, I didn't see a dividend announcement, so I don't know if that is, well, yeah, I'd have to look into that. Dividends payable, I have to check that out. Provisions here, lease liabilities of 19 million, trade and other payables of 298 million. Okay, so that's the state of their current liabilities. And we spoke about revenues already, but we mentioned that there would have been an impact in terms of the $39 million loss. So employee benefits expense, other operating expenses, raw materials and consumable used, all of that would have grown from, so 180 here in terms of other operating expenses compared to same quarter last year. That grew by about 50 or 64 million. And let's see here, and it's raw materials would have been 20 million more, as opposed to pretty much the same revenue for the previous period. Both of those combined to make negative earnings. So that's what we're seeing here. All right. So in terms of cash flows, negative is where we're starting. So then we have the different adjustments. Let me see here. Usually we just look for anything that stands out really. So increase in due to immediate parent company here, 27 million as opposed to 14 here. Increase in trade and other payables, 42 million as opposed to 14 here. An increase due to from fellow subsidiaries, 74 million as opposed to 49 here, right? And then of course, investing activities, that's what we're seeing here, 363,000, not much compared to the previous period. And lease liabilities payments from financing activities is what we see here. So again, net cash would be negative based on us, coming from, based on what we would have looked through. So that's what we're seeing there. Let me see if there's anything else that we can glean from this. I think this would be the breakdown to the different subsidiaries. Yes, we saw that. So this is what you're seeing here. So the immediate parent, we saw that 362 million to Answer Coatings International Limited, and then the fellow subsidiaries. So, that's what they would have had to pay, 531 million. I believe that's the amount I would have seen. So this breaks it down, all right? And then I believe the rest of that is just top 10. So that's what we're seeing there. Let me check to see if Moneyline is back up. No. Okay, great. All right, so we're just gonna look at the price history here. Other surveys, stock market summary, and then we just search for the ticker. Click on that. That brings us to this breakdown. Now, as I said, no trading took place today. So typically we try to look to see, what's happening in the queue. So 12 orders, not a lot. Let me go to the last month. Volume, you're seeing 34,000 units there, 4,000. There are some days where there's no trading, so there is no volume, right? So you're seeing that a lot here. So not a lot of volumes traded in this company overall. 3 months, the highest amount is 34,000 units. Last 6 months, there is 92,000 units back in February. Last year, 274,000 units back in September, right? So I'd have to check to see maybe if there was an announcement about that. But typically you're not seeing large volumes in this company. So of course, that would be a concern for some investors. 105,000 units back in February. So usually what we try to do is when we see large volume here, we try to do some investigation to understand why it may be. Is it something that maybe it was, directors buying or selling or anything like that, or maybe some announcement that may be relevant for us in terms of information as an investor. And max here back to March 2019, this would look like. Maybe this was around the time they paid their dividend. 3.7 million units traded, right? So in the last couple of years, we're not seeing large volumes here. All right, and last trades, of course, there's nothing here because nothing was traded today, and the candlestick is there. All right. All right, so in terms of news, now when I did a Google search for news on the company, so they would have mentioned, of course, in their report that they're looking to make investments to improve things long-term for them. They mentioned about the next 2 quarters being, they're seeing more investments in terms of that infrastructure. So following flat sales growth in 2022 and the inflationary impact on earnings, Berger will be retooling its operations. So let's see what that article tells us. Search and find that one. The rest of them, I don't think is going to give us what we're looking for in terms of information. Let's try and find this one. Okay. Apologies for all the ads on the screen. I have no control over that. Or maybe can I change the reading view? Maybe. I should look into that. I don't know if I can do that, so I'm not going to do that. All right, so it says here they're targeting doubling their capacity. So went through that already. Let me see if I can zoom in here. So the GM outlined that the company will be spending over 150 million in retooling the company's operations to drive more efficiencies in the business at a time when the construction sector is experiencing slowdown locally, right? And would have seen that in terms of that consumer demand being lower. The first component of the expansion is to begin this month with the next milestone set for October, right? So you're gonna see some investments this year in being prudent. They have some major equipment changes, and they also have investments in one of the filling lines. They're trying to improve the efficiency of the operations and how they create savings from that side, as opposed to passing on price adjustments, right? So weighing that cost between increasing prices to hopefully increase margin, which could potentially lead customers and clients to go elsewhere, versus trying to be more efficient, right? That's what he's saying here. So when asked about the impact of the investment on capacity, he stated that it's like almost an entirely new filling line to manufacture the texture products, filling it and having it packaged. So this is going to be significantly more and could be almost doubling the capacity of what they're able to do now, right? So that's great investment in the long term. So it's saying here that, well, this is speaking to the, okay. We went through those already. Because they're a premium brand and a market leader, how they've been positioning themselves is what they want to make sure people understand the application of the paint, provide consultation and technical advice, create more awareness of the brand, etc. Whether they buy from them or the dealer, it doesn't matter, as it's about the brand itself. That's what their GM said, as he emphasized that the color stores aren't intended to compete with the hardware stores and other dealers. So they can proudly state that they're the market leader and remain the market leader, added Chairman Adam Sagba on queries about its market leading position. He also is the head of construction at Ansa McCall. And let me see here. Okay, and they're looking to grow their sales. Okay, all right, so that's information that, okay, let's see something here as well. It says the ability for us to take the price adjustments that we've been getting from suppliers and roll it into market is not a viable option for them. From a financial position, they've been impacted, and it's the trade-off of a short-term financial position, leveraging the strength of the Ansa McCall group and the ability for them to ride out the storm so that when the market does recalibrate, they're poised, they've maintained their position in the hearts and on the shelves, right? So you're seeing the strategy there where they're not wanting to increase prices, but they want to pretty much focus on efficiency. And they're hoping is that when things recover, when the economy recovers, when the construction sector recovers, then they'll be able to benefit from loyal customers and clients. Okay, so they did 3 price increases in 2021 and 1 in 2022. Wow. As the company sought not to add more pressure to consumers whose wallet shrunk with elevated inflation, right? So we did see that. Sales from the hardware stores are consumer driven. That makes sense, which means that additional hikes can drag sales, right? So that's what we're just talking about there. So it's striking that balance. Okay, so the company would have significantly benefited from the construction boom in 2021. Its sales volumes dipped in 2022. We saw that from the numbers, and their inventory remained flat. So we went through this already. Okay, so this is the more of the same as to what we have spoken about before. So based on the capacity that we will have in the retooling, we will be looking at supplying local demand, which there is strong demand for, and supplying Trinidad and Guyana. One of the texture products is relatively new in that Trinidad market. There's no limit to whatever territory you want to see, but those are the 2 big markets, right? And that's what their GM said. All right, okay, and the rest would be, well, final statement here, our focus continues to be on the long term. Of course, we're not shortchanging what the demand is now, but it's really about long-term success and sustainability of the company. They're the market leader in what they're doing now, is not to just maintain that position, but to grow that position in a stronger way and continue to be the brand of choice, right? So that's the article that we were able to find. So yeah, what we read there was pretty much what we were seeing in terms of just what the report was saying, what we, kind of concluded would have been the reality for them. Now it makes sense when a company understands the reality of the environment. It makes sense to focus on efficiency. So that's definitely something that makes sense for them to invest in making their operations more efficient. It bodes well for them long term. There's nothing that you can do to change current demand, right? If demand is lower, demand is lower. We mentioned some of those reasons before, but what you want to see is them, positioning themselves for the long term. But just understand what it means for you if you're a potential shareholder in this company. It means that their focus is long term. So if you're looking for something maybe long term to add to your portfolio, that's what their priorities are focused on right now based on how things are. We looked at what was said in terms of the next 2 quarters, so we can expect that things will also fall off there, or maybe, well, let's see, right? Let me not speculate there, but it really hinges on things being back to normal, in terms of maybe that return to profitability, since they're unwilling to further increase prices, right? So from 2021 to now, there would have been 4 price increases. They seem to be reluctant to continue to raise prices, which is typically something that companies have to weigh, right? You're never usually in a rush to raise prices, especially if your product is not considered something that is like mandatory for people to purchase. So yeah, let me know if you have any questions in the comments. That is it in terms of Berger and my review. Again, I just want to mention that this review was sponsored by JMB Moneyline. I really want to thank them for sponsoring this episode. And if you have any questions about the platform or anything of that nature, feel free to just leave it in the comment. But what I try to do is actually use the platform while I do the review. So if you missed that, just feel free to check out that section of the video and you'll be able to see it. So what we're going to try to do next is get an interview with the CEO of Berger, see if we can get some insight as to what is happening in the company in terms of what the reports won't show us. And it's really, I guess, for you to understand as an investor or a potential investor in this company, what the realities are now, and opportunities may be there for the company in the long term based on what we're seeing now in terms of the market. So hopefully you enjoyed this review, and if you did, be sure to like the video. If there's anything that you'd want to learn in terms of investing, how to understand companies, how to make your own investments, we do have content on our platform here that helps with that. So be sure to check out our list of videos. We do stock reviews like this, which we're trying to go through every single company at least once. Of course, there are companies that we won't cover because we are a faith-based community. So that is well documented. I won't go into that here, but what we're trying to do is go through every company at least once. And then after we've done that, we'll make it a little bit more topical, meaning we'll probably just narrow it down to a few companies so we can do maybe an analysis every quarter for a year or 2 years, or so we can understand a little bit deeper how the company is performing in terms of their stock price in alignment with their financial performance, right? That's a further analysis that we're looking to do. But for these stock reviews, what we're trying to do is introduce every single company at least once, and then we can start doing maybe tracking up maybe a certain set of companies to see how they're performing throughout the year. I think that would be interesting to see. So let me know what are your thoughts on that, if you'd be interested in seeing that. And let me know if you have ever considered owning Berger in terms of the stock. And yeah, let me know. I look forward to your comments, and I will see you in the very next video. Thank you for watching.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow